We're just getting some breaking news out of the Federal Reserve as it relates to its lending programs. Crossing moments ago, Steve Liesman has the details. Steve.
Sarah, thanks very much. The Federal Reserve announcing it is expanding the not yet, but hopefully soon to be launched Main Street lending facility. This is an important development. It's lowering the minimum size of the loan to $500,000 from $1 million and expanding the pool of businesses that will be eligible to borrow once this thing opens. For example, businesses with 15,000 employees are now eligible. That's up from 10,000. Also, it has a higher revenue cap than it had before. It's also adding this third loan option, which is really interesting for companies that have more debt. I don't know. It's possible that maybe the oil companies have even too much debt for this, or even the private equity companies, but it's certainly a question that needs to be answered as to whether or not the Main Street lending facility might now be open to at least some oil companies, maybe some private equity companies, depending upon their level of debt. Now, yesterday, I got a chance to talk to Treasury Secretary Steve Mnuchin, and I asked him this question about how much risk with the taxpayers' money is he willing to take on, and address this question that the Treasury wasn't taking enough risk. Here's his answer.
There are people who have said, I should price this so that, we lose all of our money so that we support these markets. The $450 billion are not grants. So they are money that I invest in these facilities to create credit support. So I think it's pretty clear if Congress wanted me to lose all of the money, that money would have been designed as subsidies and grants as opposed to credit support.
So the 450 he's talking about, that's doled up into pieces. 75 of that goes into the Main Street leverage facility. It's leveraged up 8-1 and becomes $600 billion worth of lending. The question is, should it have been 10-1? Could it be higher than that? Could they take more risk, get more money out there to people, maybe lose a little more, but maybe help more companies now? Sarah?
Steve, it's David. I had a quick question because it's interesting. This continues to expand. I mean, there was concern initially, of course, about those non-investment grade companies that did have, that had almost 10,000 employees or had a large revenue base. And now it just keeps expanding at this point to try to, I guess, incorporate as many companies as possible, whether big or small.
That's absolutely right, David. What I think they're finding is that you've got the PPP program over here, the Paycheck Protection Program. That's for companies with 500 or fewer. Now they've got this other program that the Fed's going to do. But remember, these are loans, not grants. These are going to be LIBOR +3 loans. There is a deferral in here. The terms are up to 4-year loans. They are expanding it. At the same time, David, there's a legitimate question as to whether or not the number of companies that are out there are going to be able to use it. Chair Powell yesterday stepped to the microphone and said, you know what? If you can't pay back this loan, this may not be the facility for you. And several times in that press conference, David, he kind of sounded like he was appealing to the Treasury Secretary or to Congress to put even more money in to get more business help.
Interesting. Steve, does it come with any strings attached, like keeping people on the job? Which is obviously a critical part of the other stimulus program or the relief program from the federal government?
Sarah, I do believe there are certain strings attached. I don't want to misspeak because they just laid this term sheet on me. I think there are some strings attached that come from Congress that have to do with not lending to the Trump administration. There may be some dividend payment and some share buyback strings attached. But I will be able to update you on that. I'll send you an email, Sarah, and I'll also go on air and I'll explain what strings are attached about employment. I think there was something earlier about taking reasonable effort to retain employees. I don't think it was the same kind of conditionality as the PPP loan that says if you use X amount for your paycheck, then the loan is forgiven. That's not in this.